Hello everyone, welcome back to another video. In this one we're going to talk about stop loss positioning for intraday trades. Positioning stops for your intraday work is pretty simple. There's not much to it, we just want to follow the order flow and put stops beneath the structure. But there are a few points that are interesting and beneficial to know, and that's what I'm going to talk about in this video. So looking at this very clear example, we have lower lows and lower highs turning into higher highs and higher lows. We don't need to worry about the basis of this trade too much in terms of higher time frame work. I just want to show you following the order flow and positioning your stops. We can see here on GBP USD then that we just shifted into an uptrend. We broke through this structure point here, which is really what has kicked off this uptrending motion. But then we went and pushed through this next structure point, which really confirms to us that the trend is up. Now at this point, we have indeed pushed through this structure point as well. So this is actually a new higher high in the trend. Now we know we want to work with the zone that broke structure, so we can mark off this small area at the bottom for that zone there, and that is where we could make an entry. So the general thesis for positioning stops is simply to enter with a stop beneath the zone and your targets into whatever target, as per the previous video, you want to go for. So in this instance, we could be looking towards this imbalanced supply zone. So this will be a 6-hour position. Now, the important thing that I wanted to mention and that I wanted to present to you was when we have a tricky bit of price action like this, where we have this higher low, but we have a very clearly imbalanced zone just below as well, we may also want to consider that within our stop. So for a trade like this, I may go a little bit pickier, put my stops to the midpoint, just so we don't kill the risk reward too much, and then clear that low with the stops. Now what that's going to give us is a near 4R position, which obviously chops the risk reward down a bit, but allows us to get an entry at the zone that broke structure, while still clearing any nearby zones of interest. So this was obviously the zone that broke this structure, and then this was the zone that broke this structure. So I think if we enter here with a stop below, it may be a little unwise due to that imbalance and due to the probability that this is going to get tested. Now this zone and previous zones are not of too much interest to me because we've made significant structural moves from there, but this is definitely a smart thing to do. So let's just see how this trade plays out. Will we get triggered in? Now there we go, we get a trigger in and the market does push down just a little bit, but then begins its move to the upside. So very good thing to see there. As you saw, we did indeed benefit by putting the stop below the previous structure, because although we didn't come and retest this zone, we did trade into the imbalance in the middle of that, and we would have been triggered out. So when you have tricky areas like this, multiple nearby imbalanced zones, the best thing you can do is go a little bit pickier with the entry, shift the entry to the middle of the top zone, and put stops below that previous low. That's going to make sure you are not taken out of the move prematurely and you can actually profit from the whole movement to the upside. Now we could follow the same rule again using this imbalanced demand zone here for our entry, and we could go ahead, use the midpoint and put a stop below this previous low just to make sure we don't get swept out. Because we're joining the trend midway through a movement, just after this first initial break of structure here, we may indeed actually look to clear that low just to be safe on this position, and this is going to offer us a 3.77 risk reward move. So if we then see a push down, trade into that, we get a little bit of push down lower, which is a good reason why we actually move the stops and clear the lows of the market. And after that, we get a tap in and the market does run and actually, I believe, fulfills the target. There we go. So that is the two movements considered. And what we actually do here with stop positioning is clear out the previous lows. And the reason is we're joining quite late in a movement, and it can just be beneficial to shift the stops a little bit further and make sure that we don't get stopped out. Sure, we lower the risk reward in this example from 6 to 3.9, and in this example from, potentially about 10 to around 4, 3.5 or 3.9 again. But what we actually do here is secure a higher win rate. So here I have a gallery of examples to run through, showing a bunch of trades, and we can look at the stop positioning on these. So this one here is actually executed using a very low time frame. We'll look more into these very low 15 and 30-second time frames in the future for refined entries, but for now I'm teaching you the basis on the 1 minute so that everyone can get involved, because most of the people don't have these very low time frames. You do have to have quite an expensive, around $70 a month, TradingView package to actually use these time frames. But regardless of that, the concepts stay the same, and in this example we can see we had lower low, lower high, lower low, then we had this consolidation breaking into a higher high, so we can use the zone that broke structure with a stop loss beneath all of these previous wicks to actually secure a very nice entry. In this example, we are shifting the other way. We have a sweep of the Asia high, then we have a breakdown, then we can target the Asia low for our trade, but we see here imbalanced supply. Do we sell the imbalanced supply with a stop just above? Nope, instead we clear this point just in case the market wants to push up to this high. So the stop loss clears the previous high as well as this zone, and that looks us in a healthy 1 to 5 trade on the way down. So this is an example where we had a few losses followed by a few wins. In this example, we had an entry at this point here. We put our stop loss beneath the zone because there aren't any tricky imbalanced areas or wicks beneath. So we put a stop just under that zone. Trade ran up. In this example, I could have managed better, but I didn't. It was a break-even trade. Second example, the stop loss was actually placed beneath all of these previous wicks, which was a good stop placement. However, it was a bit of a rush trade and this one lost. Now the final example here, we entered from this demand zone, but we did have this small demand area below. So we actually went with the stop and cleared these lows as well to make sure that we get the trade secured. So you can see it's a bit of a running theme. When we're entering late, but we're near the bottom, we can actually go ahead and extend the stop loss just to clear out the lows. And that means that unless the structure completely breaks down, we are all good to go. The problem we can sometimes run into if we go with very tight stops in areas like this where we are also seeing other demand regions is that we could get wicked out, just like this for example, before the trade runs. So it's better to accept a slightly smaller risk reward and go with logical stops clearing highs and lows than it is to go very, very tight and risk getting stopped out of a lot of positions. Here we have another one. The reason for my stop loss positioning being all the way up here is because I clear this imbalance. And that way, if the market wants to push through and hit this imbalance point, we are still going to be kept into the trade just about. So we gave this a little bit of leeway. It did turn out to be a break-even trade, but that is a solid indication of where we position stops. So same again here, we have this candle here, which wicks us up to the upside. In this example, the stop loss brings us a little bit lower than this candle as well, just in case we get a pullback lower. And as we can see, we did get a pull lower, and then the market actually made its run up from there. So this one was just quite a lucky one, really. This is not too systemized in terms of something I can show you. I just went and cleared out this low of this candle as well, in case of wicks down. Now this one here, I went with a little bit of a wider stop to clear this breaker area. So we spoke about breaker areas earlier. We have a demand zone that shifts into a supply zone. The demand zone in this example was broken into supply. So I just went ahead and put my stop over that area in case the market came up and tapped that breaker level. So as you can see, we're constantly looking for other supply and demand zones, breaker areas, and areas of interest like imbalances that the market could push into, and we want to clear the stops with that just to make sure we don't get wicked out before the market makes a run for us. In this example, once again, just a little bit of leeway under the wick here, and that gave us a very good entry. In this example, we went with quite a far stop on this one. We had the entry coming in here, but there was another demand zone just underneath this where it says zone that broke structure. So I went and cleared that as well, and just about cleared the top area of this demand zone too. Now these ones are very clear, very solid trades. We have here a initial impulse, so we put our stops beneath that and just a little bit further down for a couple pips leeway. Then when the market moves up, makes a new higher high, we can see here we have no tricky imbalanced areas to work with, no tricky demand areas to work with, so we can go with quite a tight stop just beneath the low. And then the third execution, exactly the same, no tricky areas here, so we can go with quite a tight stop just below, and as we see, the market then did make a nice run. Same again here, we have the initial entry was missed. The second entry, we actually went and cleared this demand zone as well with the stop, because we can see here, this is the zone that broke structure, right? But we then also have a little bit of a tricky zone to work with. So instead of being very tight on the stops, which in this example would have worked, we actually go and clear out the demand zone below as well, just to make sure that if the market does wick down a little bit, we don't get taken out. And this one as well, we went and entered here, but I also went and cleared the low of this doji candle, just to make sure if the market wicks beneath, until we break structure, we remain valid in the trade. Here we have one where we just clear the low point of the higher time frame demand zone as well. As you can see, this is a high time frame demand zone. The low time frame demand zone is within that, but we use the stop loss just under the high time frame demand so that even if we wick down, as we did here, we don't get taken out. Now, this was a break even, but you can see here that we would have been taken out at stop loss if we had put the stop too tight within that higher time frame zone. This is an example where we had a couple of break-evens there. There was one successful position, and this one successful position accounted for this previous demand region as well here, just to make sure that we don't get wicked out too fast and we end up missing out on a good win. Another one here where we have a selling opportunity, very clear sell here coming in from this zone that broke structure. But once again, I went with the stop over this previous high in case of any wicks that came through into this area. Now in this example, you see that this would have worked perfectly with a tight stop. However, You will see after taking quite a few trades following the system that quite often you are going to get wicked out, or a lot of the time wicks do come in. So it's better to be a bit more conservative, accept slightly lower risk reward. It's going to give you less losses, higher win rate, less stress, more confidence. And this is a break even and a losing day, so not much to say on the stop positioning there. Obviously we went and cleared some of these previous highs just to make sure that structure remained intact, but it didn't work out anyway. This might be a good one to talk about. We were looking for the shorts from this supply zone, but I see here a tricky supply zone above, so I used my stop to clear the high. And as we see, it worked out nicely. And even though we ended up the break-even trade, that saved us from taking a losing trade, which we would have taken if we went with the super tight stop. And once again here, we have a initial position entered from this supply zone, but we went and pushed the stop all the way over this previous structure here to make sure that we are staying in the trade and we're remaining valid, even if the trade doesn't work out in our favor. Now you can see there was a trade just before that, which was a 0.5% loser. And the reason that that lost is because we did not extend the stop too far. Okay, so you can see the consequences of failing to move the stops too far, and then we can actually see the successes of having a logical and very well-defined stop loss. And here we see on this break even, we just went ahead and cleared this high on the trade. And then on the loss, I went ahead and cleared the midpoint of the supply zone as well, but it did not work out. And in this trade here, this one actually went and cleared a demand zone that we see underneath this zone that broke structure tag. It still was a loss, so not too much to say on that one. But then when we broke down and started shifting to the bear trend, rather than selling with a very tight stop over this high, I also went and accounted for this previous supply zone as well, just to make sure that if we do push up, we still remain in the trade. Another example here, very clear structure on this one, no tricky areas to work with, so we can go ahead and put a stop just under the zone as we did, so it's a nice successful move there. Same with this one, no tricky areas, so we just clear the high of the supply zone that we're selling from very simply to bring it down. And then this one here, this was the zone that broke structure, but I went ahead and opted for a stop loss over this high because of reasons like this. So you see this wick here came into that breaker area or came into the Asia high before selling off. Had we gone with a very tight stop, we would have been out of this move, but instead we went and pumped it over the high here, and that allowed us to stay in the movement. This one is a nice one, not too much of a tricky area to work with, so simply just running with a standard stop loss over the zone. And this one, as you can see, we sold from this area, but because of this imbalance and because of this higher supply point, we put a stop over the high. So when you are positioning stops, it is systemized, but you want to always think about, are there any tricky areas around price that I may want to clear out with my stops, just to make sure that I don't get stopped out before the market makes a profitable run in my given direction. So this was a losing day, just an unfortunate day, not too much to say about stops there. And then once again here, in a nice simple example like this, zone that broke structure, no tricky imbalances above, so we go ahead and put our stop just above the zone. And here again, we have a zone that broke structure, but we opt to put our stops over the previous high as well, because we do have that small imbalance supply area. Better to be safe than sorry. In this example, we sell from this zone, which was a very low time frame zone on the 1 minute, but because I saw this supply area too, and there's this break area here, I just went ahead and put my stop around that region to make sure we give it a little bit of leeway if the market pushes through. And as you'll see in this example, we did indeed push through the 1 minute supply, traded into a higher 1 minute supply at this level here. This one, not tricky at all. We are selling from a high, there's no tricky imbalances behind, so we just go ahead and put a stop over the zone. So that's just a little indication of how we manage our stops and how we position our stops to make sure we don't get stopped out earlier than we need to be.